In today's video, I'm going to make it super simple for beginners to understand how to invest in stocks. We'll start from the basics. What exactly are stocks and how can you invest in them? I'll also share some insights on how people have built wealth through stock market investments. Lastly, I'll give you some recommendations on the best stocks for beginners. Hello and welcome to Only Stocks, the channel dedicated to providing you with the latest news, insights, and analysis from the ever-evolving world of the stock market. We understand that the stock market can be a complex and intimidating landscape to navigate, which is why our team of experienced analysts and industry experts is here to break it down for you in simple terms. From company earnings reports and market trends to investment strategies and emerging technologies, we cover it all to ensure that you stay informed and ahead of the curve. So whether you're a seasoned investor or just starting out, join us as we explore the exciting world of stocks and uncover the opportunities that lie ahead. Don't forget to hit the subscribe button and turn on notifications to stay up to date with our latest content. Thank you for tuning into Only Stocks, and let's get started. Imagine you own a business and you're looking to raise a significant amount of money to make it bigger and better. How can you do that? Well, one option is to find investors who are willing to contribute money to your business. And guess what? The stock market is a fantastic place to find those investors. Here's how it works. When you want to raise funds for your company, you sell a portion of your ownership in the business to these investors. And what do they get in return? Stocks. Stocks are simply units of ownership in a company. When you buy stocks, you become a part owner of that company, sharing in its successes and failures. It's like having a little piece of the business for yourself. When you buy stocks in companies like Apple, Microsoft, or Tesla, you become a part owner of that company, even if it's just a small piece. You're not the only owner though. There are thousands of people who also own stocks in these companies, and together, they are called stockholders. Now let's talk about how to invest in stocks. The stock market is like a huge marketplace where you can buy and sell stocks. To participate in the stock market, you'll need an online brokerage account. There are many options to choose from when it comes to online brokerage accounts. These accounts allow you to buy and sell stocks right from your computer or smartphone. Once you have opened a brokerage account, you can transfer money from your bank account to your brokerage account. This will give you funds to buy stocks. It's important to choose stocks from good companies. When a company performs well, its value increases, which means the price of your stock also goes up. Additionally, if a company is profitable, it may distribute some of its profits as dividends to its stockholders. The great thing about dividends is that you don't have to do anything to receive them. They are automatically deposited into your brokerage account. This is a form of passive income, where you earn money without actively working for it. It's a pretty awesome way to make money. When you want to sell your stocks, it's a simple process. You might want to sell them for various reasons like wanting to cash out or no longer liking the company. You're free to make your own decisions. And the best part is that there are no fees or commissions involved. Once you sell your stocks, you'll have money in your brokerage account. You can transfer that money back to your bank account whenever you want. Some brokerage accounts even pay you interest on the money sitting in your account. Now, let's talk about how people get wealthy in the stock market. There isn't just one way to do it, but I'll share the most common approach. It's called buy and hold dividend investing. This means you buy stocks and hold onto them for a long time. If the company pays dividends, you receive a share of their profits. It's a popular strategy that many people find appealing. There are different styles of investing in the stock market, and I'll explain a few to you. The first style is buy and hold. This is when people buy stocks and hold onto them for a long time, often years or even decades. They don't actively trade or sell frequently. It's a set it and forget it approach, where they let their investments grow over time. On the other hand, there are traders. These are people who actively buy and sell stocks more frequently. They're not interested in holding onto stocks for the long run and watching the company grow. They try to make money by taking advantage of short-term price movements. So, you have investors who prefer the buy and hold approach and let their investments grow steadily. And you have traders who actively buy and sell stocks to try and make quick profits. For beginners in the stock market, my recommendation is to refrain from trading with a large amount of money. It's better to gain some practice and experience first. While it's true that some professionals get rich through trading, that comes with time and expertise. Now, let's talk about speculators. These are people who buy smaller, riskier stocks that have the potential to skyrocket in price. Speculators take calculated risks, and it's not necessarily a good or bad approach. Some people made a lot of money by speculating on stocks like Tesla, Amazon, or Walmart. However, it's important to know that speculating can also lead to significant losses. If you choose to speculate, it's advisable not to invest too heavily in one stock and avoid getting emotionally attached to it. Emotions can cloud your judgment. On the other hand, we have dividend investors. These investors focus on buying stocks that pay regular dividends. Many dividend investors choose to reinvest their dividends to accumulate more wealth over time. It's a strategy where you can benefit from both the dividends received and potential stock price appreciation. Dividend investing is a fantastic way to generate passive income. You can set up your accounts to automatically reinvest your dividends through a program called a dividend reinvestment plan. Personally, I'm a big fan of dividend investing because you're essentially earning money without doing anything. Your money is working for you. When it comes to choosing your investing style, you should know what appeals to you from the beginning. It could be one style or a combination of styles. There's no one-size-fits-all answer, and each method has its pros and cons. So it's important to understand the advantages and disadvantages of the style you choose. Now let's talk about the best stocks for beginners. The stock market offers a vast array of options, including small companies, big companies, and companies from different sectors like energy, technology, real estate, retail, banking, pharmaceuticals, and more. As a beginner, I would suggest investing in larger and more stable companies. This is because there's less risk involved. Investing in smaller, lesser-known companies carries a higher chance of losing a significant amount of money. As a beginner, it's important to get a feel for the stock market, take it easy, and focus on learning. As you gain more experience and knowledge, you can gradually venture into stocks that offer more risk and reward. But initially, it's wise to stay within your comfort zone and invest in bigger, more stable companies to minimize potential losses. Please take this advice seriously. The stock market is not a get-rich-quick scheme. It's crucial to be an investor, not a gambler. My goal is to see you make money, and as a beginner, it's better to make a little bit of money than to lose it. I strongly recommend starting with safer stocks and gradually learning the ropes. Remember, slow and steady wins the race. Investing in the stock market is a marathon, not a sprint. If you want to play it even safer and diversify your investments, consider buying index funds. These funds consist of a collection of stocks, like a big basket of stocks, which provides you with diversification and reduces your risk. One vital piece of advice: always conduct your own research when looking for stocks to buy. Approach it as if you're buying a real business. Investigate the company, understand what they do and how they make money. Analyze their competitors and compare their performance. Assess their future prospects and consider any potential disruptions in their industry. Evaluate whether their stock price is overvalued, undervalued, or fairly valued. Please take the time to do your due diligence and make informed decisions. As always, thanks for tuning in. I hope you found it informative and valuable in your investment journey. If you enjoyed this video, please consider subscribing to our channel to stay up to date on the latest insights and analysis on the stock market. Also, don't forget to hit the like button and share this video with your friends and family. Remember, investing in the stock market can be complex and risky, but with the right information and tools, you can make informed decisions that could lead to substantial returns. See you on our next one.